Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good morning, everyone, and welcome to Develop Your Edge with Anthony Crudele. I'm going to be your host today. I'm Michael Burke. I'm standing in for Tom Schneider, who's on vacation this week. So, Anthony, great to see you again. As always, how are you doing this morning?
I'm doing great, Mike. I'm excited to talk about a style of trading that I moved into after years of scalping. Remember, everybody, this is part 2 from last week. Last week, we talked about scalping, and that's what I did for 15 plus years of my career. And for close to 10 years, the last 10 years, I've been moving more into a swing trader mindset and style. And so we're going to discuss that today.
That sounds great. For those of you who didn't see last week, you can go to YouTube and watch that video, or you can, if you're a NinjaTrader client, you can log into your dashboard. It's in the Learn section. So yeah, definitely last week we got started on the right foot talking about scalping. And today, it's swing trading. I think that if I were to characterize myself, I would say that I'm a swing trader. I don't do a lot of day trades. I'm usually looking for something that lasts a couple of days. So let's get started.
Yeah, I mean, when you look at styles of traders these days, last week we talked about how scalping is different from what it was when I scalped. When we scalped back in the pit, even electronically, I was scalping with size for ticks. And that's changed. A lot of people say, oh, I'm a scalper now intraday. And if you're scalping the S&P, you're really scalping for points. You're not scalping for ticks. And so I went over that type of strategy last week. And this week is going to shift gears, which is, as I already mentioned, is going to be more focused on swing trading. And when you really look at the two styles of futures trading, I mean, very few people are position traders. Most of the position traders out there are going to be, big institutions, funds. Most people are not carrying futures positions for days, if not weeks, just because you've already got the leverage, and most of the people that are trading them are going to be trading them intraday. And that's when you look at your charts and you look at volume, you're always going to see a lot of volume on opens and closes, because that's when a lot of day traders, like all of us, are putting in beginning orders, and then we're closing out, so we don't have those margin calls at the end of the day. And so when it comes to swing trading, the way I look at it is, and I created a whole PDF for this, so if you go to anthonycrudele.com, you can actually download really everything that we talked about last week with scalping, and this week I talked about with swing trading. And it's just a free reference for you to look at. When you look at swing trading, it's one of those things where scalping, you're looking at volume and price, right? Because you want volume to confirm what you're seeing in the price action, because you want to be more precise with an entry. And so we talked about using some order flow tools for scalping. With swing trading, you don't really need that. Price is really everything, because volume at a price in one area is not going to make much of a difference potentially in the outcome of that trade. Because at that moment, when you're getting into a swing position, your stop is going to be wider, your target is going to be wider, and you're not going to be super sensitive with how much volume is traded right exactly at that moment at your zone of execution. And it's simply because you have a wider zone and a lot can happen following that. The order flow 5 minutes later could all of a sudden be shifting in a different direction. And so you don't really need order flow tools when you're looking at swing positions and markets. It really is just about following price. And what I like about this style of trading is that in my years of doing scalping, there's just so much more pressure involved, because you're making so many more decisions intraday. and you have to be so much more precise. You're getting in and out. And a lot of times you'll break even on a day and you're trading and you'll lose money in fees because you just simply over trade. And it just happens. It's happened to me, still happens to me these days when I scalp. With swing trading, it allows me to take a step back and to really say, I like this area. I'm going to trade this area and I'm going to let the market, work. I'm not going to I don't have to worry about, I don't want to say micromanaging like you do with a scalp, but it's really what you're doing with a scalp is, you have to be much more active. So with swing trading, I only look at a few things: 5-day moving average, and I look at an RSI and a daily. And I think maybe we start off with just looking at that and to give a sense of what I'm looking at before I would even make a swing trade decision. So maybe we pull up the charts on that. And so the reason why I start with a daily, and this is a E-mini S&P chart, I start with a wide daily chart and just a 5-day moving average. And a lot of times I'll even use a 10-day moving average if I want to even look at maybe a longer position that I would like to hold. But right now in markets, I'm really focused on the 5-day because the trend has really been very tight, and it's just going to depend on market environment as well. That when the market is really tight and trending really, really closely up or down, like we've seen, I like to use a shorter moving average, shorter time frame, because it allows me to actually see how strong the trend is. And if the trend is going to reverse back, I might look at a potentially short scenario that might just be a day or two move. And when you have a 10-day moving average or a 20-day moving average, if you're looking at a swing trade in a trending market, you might only be looking at longs for periods of months. And as futures traders, I always look at it as you want to be able to take advantage of both sides. And so here is a 5-day moving average, and you could see anytime that we're steadily moving in this direction, I'm only going to be looking in longs. And if you see a few days ago, we actually crossed below the 5-day moving average, and we've been trending down just modestly, but nonetheless, we have been trending down. The other tool that I add is the RSI and the daily. Remember, plus 70 or greater on an RSI, this is just a standard RSI tool, shows overbought. Right. So we were overbought here on the 15th. You got to the 16th, even into the 20th. The market was still saying overbought. And over the last couple of sessions, you're finally starting to see us come back below that 70. And what I like to see in this scenario is I don't like to sell anything when we're really above 70 and we're overbought, because any of us that have been trading this for a period of time, we realize that anytime something's overbought, it's overbought for a reason. And it's probably going to stay overbought for longer than you think. So I like to see it cross back below the 70 in the RSI, and at the same time cross below that 5-day moving average. Because in bull markets, which what we're in right now, higher prices continue to bring buyers. And then when we start to go in lower prices are going to bring in sellers, right? I mean, that's really, you could say that for every market. But the point of the matter is that I don't want to be shorting into higher prices. I'd rather be shorting and mean reversion pullbacks below a 5-day moving average when the RSI is starting to come back below 70, because it's showing that the market is cooling off. And I think maybe we bring Mike in here at this point. And Mike, this is the basic thing that I look at, and it's super simple. And it just gets me to the point, the mindset of which direction do I want to look at for a swing trade?
Yeah, so it's interesting. I was going to have a couple of questions for you. One is, do you look at a longer time frame to kind of get a base direction of the market, so that you want to maybe trade in a longer time frame, whatever that trend is in the longer time frame? The other question is that that most often, and I would say 99% of the time, you don't get across over the moving average and across below RSI on the exact same bar. So there's got to be a little bit of a fudge factor there. How do you approach that? And how much time do you give for that fudge factor for those two crosses to occur? So
this is actually really the perfect setup when you look at it. And you're right, you're not going to see this too often. Number one, the first question was, how long term of a chart would I go? For me, the longest I go is a daily. And I start with a daily just because, once again, these are futures. And so I'm not going to be holding a position in the S&P futures for probably more than a couple of days, maybe a week in a swing position. I mean, the longest trades I hold are maybe just over a week. And it's hard for me to go into any weekend with a futures position on. I just really, I don't want to. So I typically will try to get flat going into weekends unless I have a big lead on something. And then even then I'd be trimming to the smallest amount. So the daily is the furthest out I go because of just that factor. I'm never going to be more than multi-days. So I don't really look at a weekly. The 5-day moving average right now, because we've been trending so tight and with the RSI, it's actually kind of the perfect storm. If you go back and look at other times, you're going to have times where you cross below the 5-day moving average. And you're like maybe even back here. I mean, it was very minimal that it happened, but the RSI wasn't overbought and you say, oh, do I take a short there? And the answer is yes, I would still look at that. But once again, it's going to all be determined on position sizing, right? I mean, if I have more confirmations on a daily when I get to my next chart, which will be a 60-minute chart, which is what I use for my triggers of entries, how I manage my stops and all of that, that's a totally going to be dependent on the situation. So as of right now, the last couple of days, I've actually been, I don't want to say more aggressive short, but I've been seeing cumulative delta intraday coming in on the shorter term charts. I know I said I don't look at volume as much, but overall it's been to the sell side. And I've been looking at setups on the 60-minute chart where I'm really hyper-focused only on shorts. So therefore, in the back of my mind, I'm positioning potentially a little bit more aggressively because the pullbacks are probably imminent because of what's set up on the daily.
Yeah, that makes perfect sense. One of the things that you mentioned a little bit earlier that I thought was interesting is that when you're scalping, your risk management is much tighter than it is here when you're swing trading, and that's kind of a different mindset. So as a trader, you're going to kind of switch between those two modes, between scalping and swing trading, and so how do you approach giving the trade more room with a swing trade than you would in a scalp?
So it's removing the additional indicators. And so here we are, as you can see, the markets are coming back down again here in S&P. I know we had some data, we had some oil numbers, and I don't know what oil is doing currently at the moment, but what I look for is really the 60-minute. And I'm not going to be using a moving average in here. I'm going to be simply looking at Bollinger Bands on a 60-minute. And I'll use also an anchored VWAP. And I like the anchored VWAP just to help guide me a little bit with, I wouldn't say positioning size, but it would be help me to know how much longer I'd want to try and stay in a position. With a swing position, the goal is to obviously, especially as a winner, to stay in it as long as you possibly can. And so a lot of times what I'll look at with VWAPs is really a trailer area. Right. As you could see today, we were above it. If we were long and we started to get below it, or if we were short and it got above it, it would tell me to probably lighten up my positions, depending on which side we were, just merely because of where I have that order flow anchored VWAP. And once again, it's just something that helped guide me. And what I look at here on the Bollinger Bands, and this is where it gets. You have to be the hardest thing for me, I should say, when you go into a swing position is you have to be super patient for the setups versus like intraday scalping. Of course, you still have to be patient with them, but you're getting so much more. So as somebody who kind of has ADD like me, where I keep getting more and more setups, it's easier for me on the scalp side to just say, well, look, the next one's going to be right behind me. So don't worry if I miss this one. The next one's is going to be not too long from now. But when you get into swing, it could be days or weeks before I even get a swing position. And what I look for is, and this is really the most simplest thing that I do, is I take not a VWAP. I'm so used to saying VWAP. I take a Fibonacci retracement tool. And what I do is I draw the tool from the peak of the 60-minute, and I only do this on the 60 minutes for swing positions, on the peak of the Bollinger Bands. And then what I'm going to do now is I'm actually going to double click on the Fibonacci retracement tool, and I'm going to change what is in the price levels. So you can come over here, you're going to edit the price levels. I'm going to make this 30, and I've talked about this so many times before in the show. This one, I'm just going to remove. I don't want to see it. The 38, I'm going to leave 50. I'm going to remove the 61.8. I'm going to go to the 76, I'm going to make it a 70. I'm just going to click OK. Okay. I'm going to click apply. And I actually have a template for this, but I'm just showing everybody how I do it. And so what I look for in these scenarios is for any sort of swing position, I wait for the Bollinger Bands to make peaks. And I look for, if I'm looking short, I'll go back to the daily really quick. I'll say, I want to be short as long as we stay below the 5-day, which is 34. So that's my first marker. We already talked about the RSI being overbought. So I see that it's coming off. So what I look for is any levels around that 34 area or near that area when I look at these Bollinger Bands to see support and resistance. And that's what I look for areas of entry. So as you can see here, the 70% line basically comes in at 44.34, 44.33 to be exact at what it says here. So what I'm looking at is any sort of rallies up into here, I'm looking at becoming into the market short. And pretty much unless we close above a 5-day moving average, my stop is going to be roughly equal distance to the 50% line, which will be my first target. And then my second target would be 44.04 and then potentially even lower. And this is where I would start to trail into or trail out of a position. So what I look for is anything that confirms something near the 5-day moving average. So I'm looking at this point to sell any rally that I can. And this is how I develop my support and resistance. So because resistance comes in at 44.33 on my fib tool over my Bollinger Band, when it gets up there, I will be a seller. And I will be a seller and the stop will be, so 33 to 19. So you're looking at, I mean, really it's 44.13 to 44.19. So you're looking at roughly 14 points. So you've got a 14-point stop if you get in exactly at 33. And I would be pretty much in 100% of my position at this moment, unless there was a news or data point coming out, like with the Fed speaking. I wouldn't just all go in at that point. But majority of swing positions, I'm in quicker all at once. Stop is working. Target 1's 50% off. Target 2, I'll be out of 75% and you try to trail it. But the hardest thing is, like right now, just not getting them. And so yesterday and the last couple of days, I've been doing intraday scalping to the short side because I'm waiting for a rally that reverts back up and I get a potential short, which at this point I'm just not getting. Hopefully that kind of summarized deciding between the scalping and when I would take a swing.
Yeah, that makes perfect sense. I think this is a cool innovation where you're using the Fibonacci tool with the Bollinger Bands. That's something I had never seen before until you showed it to me, on this show in the past. You talk about the idea that you're in your whole position. Can you talk a little bit about trade sizing and what your approach is? And with the advent of these micro contracts, it makes scaling in and out much more affordable than it ever has been before.
Exactly. And really, a lot of times I'll use the micros for swing positions because I'll want to be able to trail out, and you can get as many equal to as many as E-minis as you would want. But the difference is you're just adding more contracts. Remember, everybody, a micro is 1/10 the size of an E-mini S&P. So E-mini S&P is $50 a point. A micro is going to be $5 a point. And so for swing trades, it goes back to kind of the perfect storm right now. I go back to my daily. Right? If we go back, if I shrink this chart, so right now, because we're coming off of an overbought scenario, the 5-day moving average is crossed over right when you're seeing the scenario on the RSI. It's like, I just want to be short really for the short term, right? When you go back and look here, let's just say, for example, here, back at this point where we close below the 5-day moving average, you're not overbought, and you see maybe potentially, I'm not going to go to the Bollinger Bands on the 60-minute to pull all that data back up, but I probably look at a short somewhere in here, works for maybe a day or so, and then you're stopped out pretty much rather quickly, and maybe you get risk off. Maybe you get target 1, if you're lucky. And the difference is in the position sizing here is you're nowhere near overbought on the RSI. And so the RSI is a great confirmation because anytime you look at mean reversion and trend and primary trend, you want to have multiple confirmations. Anytime I go against the grain, I'm not going to go against the grain because of just a 5-day moving average, potentially a Bollinger Band, where I get that reversal or where I talked about that resistance. I would step into that with a small position, relative to a scenario where we have right now, where you're overbought, multiple closes below the 5-day moving average. And now you have a scenario where it's like there's actually sellers out there, right? Coming off of a long run. And so you have multiple worlds colliding versus just, oh, we're below the 5-day, Deli wants to be short. That's not the way I operate. I still would be short here, but the position sizing is going to be smaller relative to right now. And also choosing when to scalp or swing. Back in this scenario, I might just be scalping intraday, maybe not necessarily too much swing trading, because when I look at this, it's like, we're just in the middle of the RSI, the market showing that it could go a lot higher. Or I'm just going to do an intraday swing where I'm just short a little bit for the day and the market pulls back down and, you cover it before the end of the day. You're not trying to hold it for a period of time. So it's not just when you look at everything is the context of the situation. I said that the swing trades you have to be so much more patient for, because you're not going to get a lot of moments where you're going to have multiple things happening. And right now you kind of do, right? Because you have the 5-day and the RSI. But majority of the time, you're going to have almost conflicting scenarios. And so the context of those situations should determine your contract size and also how long you're holding a position. I don't want to be aggressive short, holding too many shorts if we're not overbought and maybe there's other indicators you're looking at just because of 1 day close below 5-day moving average. It's just ultimately not going to matter that much. And then so you have to manage that within the day. A lot of the things I'm going to show everybody is you've got, as a trader, this is the one thing I should really say when it comes to develop your edge. As a trader, over time, you learn the situation, the context, and the nuance of the moments. Right? I'm always going to be in a scenario this year where any sort of pullbacks or I get any sort of swing opportunities to the buy side, and maybe we'll do that in future shows if we get some setups. I'm going to be more aggressive with those than anything because I believe that this market is a bull market and it's not going to just give back the whole year, right? And so you want to participate stronger in trend. And scenario right now is just a mean reversion look, but it's got multiple confirmations, so you could stick your teeth in there a little bit. And it's just, what's the situation? It's the first time really in months where we've seen something like this. Go back and look. You're not seeing an overbought RSI. How long do I got to go back? This year. And so it kind of makes sense that right now the market's pulling back. Context of the situation matters.
Yeah, I totally agree. One of the things where swing traders sometimes get into trouble, especially if they've been scalping, is that they tend to set that stop a little too tight. They don't let the trade really play out. And especially intraday on some of these markets, it's very noisy during the day. So you get into a trade, it's a good trade, and the market moves against you. You think the market's against you. You think they're running your stop, but really it's just a little bit of noise. And traders need to be able to adjust for that and to give a trade some room.
Exactly. And that's why I like the Fibonacci retracements the way that I do it with the Bollinger Bands, because it fits in just the right amount of price distance of risk for me. So if I sell a 70% line or buy a 30% line, when I look at these, I wouldn't buy the 30% line, obviously now because of the situation. But when we look at these, I just say, I'm going to take equal risk to reward for my first target. Because the reason why I like the Bollinger Bands and the Fibs is because it blocks out the current set of volatility for this environment. And what I mean by that is anytime the Bollinger Bands have come in, right? The Bollinger Bands have stopped expanding and they're pointing in. A majority of the time, that means mean reversion, sideways action. So I can control my risk very well in that scenario. If I were to sell the 70% line up here at 33 and it were to stop me out, right? I would look at that and say, most likely now I'm going to be looking on the next pullback for another scenario with new set of Bollinger Bands because the trend has changed, right? Right now we're in a short-term bearish trend in a bull market. And so I'm comfortable risking that wider amount because there's going to be slippage to the upside because we're in a bull market. And so I just look at one-to-one risk reward. So for example, if I were to sell 44 33s, I would, let's just say I sold 10. This is an easy number. I would buy 5 back at 50%. And now my stop would still be 14 points above, but I made 14 points on 5. So essentially the risk, I say risk off, The risk is out of this trade for me in terms of total dollar amount of risk. I mean, of course, you have some fees. You could have slippage on stops. I get that. But for the majority of it, I'm looking at it and saying the risk now, how I manage this 5 remaining contracts is why I'll use the VWAPs, the fib tools down here as I continue to trail out of that position. That's how I scale out of them, right? And so when we talked about how the stops would be too tight, at that point, you just got to kind of believe in it and know that the next one, it might take days for it to happen. But there's been so many pullbacks to the 5-day moving average that I've seen this year where the Bollinger Bands stop. You've seen that little mean reversion back to the 5-day and you get a 30% line buy and it goes to 50% almost like that. And so I've had a few of those really good trades and you just got to believe in it. And then some don't work, some do. And with swing trading, it just takes a whole nother level of patience from scalping. Because like I said, it could be days in between. And after a stop loss, we all know how tough that is. Nobody wants to wait days for the next one.
That's true. So how about a little bit of tactics? So let's say you're in a trade, you've hit that first profit target, and the trade's going your way, and now we're getting close to the close on Friday. Is that a trade that you're going to keep on over the weekend if everything is still, all systems go? Or because it's the weekend, you're going to say, okay, I think I'll take the profit and relax over the weekend. What is your approach?
I haven't had a trade over the weekend this entire last quarter. The beginning of the year, I had one for I would say, I was using micros for that. I talked about this on the show. So it's like, it's so rare. I can go back the whole second quarter. I didn't have one weekend trade. And so it's most likely, especially in the middle of the year, I am unlikely to hold something into the weekend because just the beginning of the year. So let me explain the reasoning why that is the case. The beginning of the year, I will hold something more into the weekend because the S&P or any market that you're in is making the range, right? So at the beginning of the year, I talked about how S&P and NASDAQ basically opening range was basically the lows of the year. The market was coming off an oversold type year from last year. The bulls were building. I could see in my strategy that the market was trying to continue to rally. So I was holding stocks, I was holding some futures, and I was comfortable going into the weekend because I felt the market was making a range. Now you have a NASDAQ that's up 30-something%. You've got an S&P that's made a good range for the year. Who knows? It could still make another high. Of course, I don't know, but that's the point. It's like that could be the high, so I don't feel the confidence going into the weekend when we're in the middle of a wide range. It could stop me out in either direction versus when we're trending early in a year, the market tends to make a range. So the beginning of the year, a lot of times is really the sweet spot for me where I'll hold stuff a little bit longer in swings because the market's just making a range. Once the ranges have kind of been made, it's easy to get chopped up in a really big range. I mean, the NASDAQ could pull back 400 points, 500 points. And does that really change much of what happened this year? Not really. So I just feel like the slippage is so much greater when you get into a market year where it's already made a good range. I hope that makes sense. But once again, context matters.
Yes, I totally agree. So we're getting close to the end of the time here. Anything else that we need to cover?
The only thing I want to talk about is I want to show everybody this. This is the Currency Cup FX Trading Challenge that CME Group's hosting. Their link will be in the description of my YouTube page, also in the Develop Your Edge area on anthonycrudele.com. And July 23rd to the 28th, I love that CME is doing this. They're doing this Currency Cup FX Trading Challenge. And the one thing that I will say about this, and they just did a challenge for gold. And these are some markets that a lot of people don't normally trade. And I think if you're a futures trader and you want to see what it's like to go trade FX products, this is a great way to go just test a strategy, and because you actually could win money. And they're giving $2,500 away for first place, $1,500 for second, $850 for third. It's a week-long tournament. And I just, like I said, it's fun. And a lot of times I'm doing videos in the morning for everybody in there. Not for this one. I will be, at least I don't think so at this point. And it's just a way to go in, trade these markets. I know nobody likes to go in and trade sims sometimes. It seems like boring, but this is a way where you're actually trading it. And even though it is on sim, you still kind of have some skin in the game because you might have a chance to win first prize. And so you could actually just see how you trade these markets that maybe you don't typically trade. And I think that's cool that CME does that.
Yeah, I mean, they have great technology, and I love the way they're doing this. It's great engagement for people to trade something that they haven't traded before.
Exactly. And the only thing I'll leave everybody with is obviously follow NinjaTrader and myself on Twitter. And if you don't already, and then I'm going to be putting out a tweet in the coming week about Ask DYE. And if you could just please, send us a question on there. I'd love to get your questions on here and to bring more of the conversation from social media into the show. I know we've got a lot of new futures traders out there, and the one way that I learned how to trade futures was by asking a ton of questions. I remember annoying almost all of my mentors on the trading floor. Well, why did you do this? What is going on with that? And, the one thing that we talk about every week here in Develop Your Edge is just that context and nuance of these situations. To really be a trader, to me, that's what it really comes down to, is just learning about these different situations. So ask me these questions. Anthony, why would you do this? Why wouldn't you do that? I just think it opens it up for good discussion. So when I put that hashtag AskDYE out there, just respond to my tweet and follow myself and NinjaTrader on Twitter.
Yes, definitely. And we'll do the same thing here at Ninja. It's hashtag AskDYE, AskDye. And we can pick those up. And if we use your question, we'll send you some swag. Anthony, another outstanding presentation today, and we'll do it again next week. Where can they find you besides YouTube and Instagram?
AnthonyCrudele.com, AnthonyCrudele.com, Anthony Crudele Twitter.
Perfect. All right. Thanks, Anthony. Everybody, thanks for joining us. Have a great rest of your day in trading. Bye, everybody.